Hi all, Tony here. US stocks rebounded on Friday, supported by renewed hopes for a rate cut in December, following dovish comments from New York Fed President John Williams. Despite the rebound, the Nasdaq logged its third consecutive week of declines, falling by over 3%, with concerns around AI valuations continuing to linger. Looking ahead with end of month approaching, the data calendar is relatively light, more so due to the Thanksgiving holiday and with the BLS still playing catch up after the shutdown. The highlights, therefore, will include PPI, retail sales, core PC inflation, and US consumer confidence data. Let's take a look at the charts of the Nasdaq and S&P 500 to see where they are as we start this new week. All right, just to recap, this is the rally from the April lows, which we see as tracing out a 5-wave impulsive move. Here is your wave 1, wave 2, wave 3 takes us all the way up to this high here in August, then a wave 4 pullback, very shallow, and then the wave 5, which looks to be terminating up here in late October, and this 26,182 high, as well as the wave count, which suggests we're close to a pullback. We also have a potential head and shoulders topping pattern. Now, I'm not big on head and shoulders topping patterns. I far prefer the inverted head and shoulders bottoms as a trading signal, but nonetheless, we can't ignore it because it aligns with that wave count we have been following. In a nutshell, if the Nasdaq were to see a sustained break below this support at 24,000, then I think it's the green light for a pullback of around 15%, which takes us back to a layer of support coming in around 22,600-ish, reinforced by this 200-day moving average, currently around 22,300. Now, it does need to see a sustained break. You can see there was a marginal break lower on Friday night, and then it springboarded higher to close back above 24,000. So we're watching for this sustained break. Now, if we don't get the sustained break, then we have to allow for a rebound from this support area. We've seen it a number of times. Here's a test, a rebound, test, a rebound. We had a test and a rebound. Could we be looking at it doing it another time? We have to wait and see. But if it does start to rebound, then it probably puts this record high, 26,182, back into play for end of year. So a lot riding on the price action this week in the Nasdaq. Of course, a similar story in the S&P 500. You can see the head and shoulders topping pattern. Here is your left shoulder, your head, and your right shoulder. And it aligns with the wave count, which we've been tracking from this 48.35 low from back in April. So once again, we need to see a sustained break below this support level. Now, let's say that's 65.50 to 65.20-ish. We hit this 65.20 low on Friday, and it springboarded higher to close back above 6,600. So it is really, really an important level. You can see how many times it's tested and rebounded, a test and a rebound, a test and a rebound. If we are to get that confirmed break through this support area, then we can start to look towards some levels, initially around 63.50, but it wouldn't surprise me if we got back and tested these lows from July and late June, which come in around 6,200, and the 200-day moving average coming around 61.60 at this point of time. Aware, of course, if we do get another rebound, it brings this 69.20 record high in place into play, with scope to push up towards 7,000 into year end. That's all for now. Stay tuned for more updates ahead.